The second type is reducing balance, otherwise known as declining balance depreciation, acronymically known as DDB. So this method allocates a higher depreciation expense in the earlier years of the asset's life, and it decreases the expense over time. And the formula for calculating reducing balance method, I'm going to write it down now. First off, let me try and write the second depreciation method as second one is the reducing balance depreciation. Reducing balance method. And formula is, this formula also is quite straightforward. So formula will be book value multiplied by depreciation rate. Multiplied by depreciation rate. So this formula is quite straightforward now. So the book value in this instance is the initial cost of the asset minus the accumulated depreciation. And depreciation rate in this instance is a fixed percentage determined by the company or accounting standard. So the method reflects the natural pattern of an asset declining value more accurately than straight line depreciation method that I did the other time. In this reducing balance method, I'm going to use a very simple example also under it. So let's now take an example under it. For example, if a machine has a reducing balance rate of 20% and an initial cost of 1 million naira. So this is the question now. We have to write our solution, right? Okay. Solution. So if we want to solve this, we have to take them one year in and year out. So the first year depreciation expense, let me try and write it. The first year depreciation expense will be 1 million naira multiplied by the 20%. Remember, I'm using the formula, it's very easy. If you multiply 1 million naira by 0.2, the breaking down of 20% is 0.2. That is 20% divided by 100. So you are going to get 0.2. If you do that, you're going to arrive at 200,000 naira. Now, that's the first year. Let's now do the second year. In the second year, the book value will be reduced Remember, I've already did the first year. This second year now, the book value we have to reduce, that is the 1 million naira, we have to deduct it from 200,000 naira. Remember that 200,000 is not actually in the question, but it was the answer we got from the application of that formula in year one. So the second year, the book value will reduce to that same cost of that asset, which is 1 million naira. That 1 million naira minus the amount we got in the first year, which is 200,000 naira. That's 200,000 naira. We are going to arrive at 800,000 naira, right? And the depreciation expense would be, that depreciation expense in this instance is after reducing that 200,000 in the previous year from the actual cost of that machine. That 800,000 is the amount we are going to use now, multiplied by that percentage they gave us in our question, which is what? 20%. So 20% of 800,000 is what? You're going to get 160,000 naira. So you're going to write 800,000 multiplied by 20%. So 800,000 naira multiplied by 20%, otherwise 0.2. So you're going to get sorry, let me clean this. You're going to get 160,000 naira. So we've already did that. You can see that it's very quite straightforward for applying depreciation in both straight line and reducing balance. So in conclusion now, it is important for us to choose the appropriate depreciation method based on the nature of the asset. You know, we have different kind of assets, and that particular asset usage pattern also, there has to be considered too. So, and the accounting standard. Each method has its own disadvantages, that is the straight line and the reducing balance. They both have their own merit and demerit. And different companies or individuals may select the method that best aligns with their financial reporting goals. So there is a need for each and individual accountant to keep in mind that while this example I highlighted in this course will provide a basic understanding of the concept, the real-world application may involve additional consideration and variations. And to this, we've come to the end of the lecture in relation to depreciation and its own method with application. So thank you guys for watching. I hope you enjoyed this video. Remember to always like our video, comment your thoughts. Even if it's not for this particular video, you can comment on a particular video you can want us to do for you, and we are going to do that for you at LearnCity. Thank you for watching.